Good morning and good afternoon, boss ladies. Happy Friday. It's been another awesome week, and I hope the same has been for you. Welcome to Creating New Opportunities. I'm your host, Bill Haga, VP of Sales with the Federal Savings Bank. I'm now able to serve all 50 states again and offering pages of loan programs. Nothing better than having more opportunities to help more clients because you have more programs. Love that. Okay, I've mentioned over the last couple of weeks that we had a new opportunity here at the Federal Savings Bank has come available. We're currently hiring an unlimited amount of real estate brokers and real estate agents who are interested in working on both sides of the transaction and getting paid a commission from both sides as well. The position is a part-time dual employer banker. It's a commission-based W-2 position with our bank. We have currently hired over 250 brokers and agents, and we're looking forward to hiring another 250 of you. So we can hire even more than that. There's not like a limit that we got, right? So if you've got 15, 20 minutes, call me. Let's talk about it. But either way, if I were you, I would do anything and everything in my power to make sure I attended next Friday, okay, next Friday, to learn more information about this great opportunity. Greg Warham, our regional senior vice president, will be joining me on Friday's call. That's Friday, July 24th, to explain this amazing program, answer all your questions, and of course, provide you with the steps in order for you to proceed to join the Federal Savings Bank team. I can tell you this is something that you will not want to miss out on. The best thing about this is you don't have to be licensed. You don't have to go through all the training like that. You don't have to take the test that we have to take. It super easy stuff. Okay? But yet, in order to be compliant, still things that need to be done, right? Compliance is always the number one on our list. All right. So we'll talk about that more next week and days to come after that, I'm sure. All right. Today's agenda. Of course, we're going to talk about the market and rates. We're going to talk about some client wins from the week and today's new construction program, right? We're unfolding and unpacking these new construction programs that we have. Last week, we spoke about the jumbo one-time close. This week, we are going to talk about the jumbo two-time close. Okay? Next week, Greg and I will be discussing our dual employee banker role. This is a must-see. And then, of course, what's happening this weekend. All right, so let's dive into it. Market and rates. I'm telling you, these interest rates are just choking me. So they ticked up slightly higher again this week, right? Due to the widely watched 30-year fixed mortgage was rising from like 6.49, right, to 6.55. So we lost a little bit last week, or this week, I should say. And once again, it's all based off of Iran, the war, risk, concerns, all that's hitting the market. So it has definitely been a ride for interest rates for sure. So, like I mentioned, 30-year fixed rates are averaging right around the 6.5% mark. 15-year, it's up, right, to approximately 5.93%. It increased up over 5.82 that it was at. So everything raised up this week. All right, the Federal Reserve, their funds still remain the same. It's unchanged. The Feds have paused rate cuts with the markets, anticipating potential shifts later this year. Shifts as in interest rate increases. I know, I can't even believe it. Our inflation was at 9%, so they raised rates. Inflation's down to 3%, but yet rates seem to still be high and still climbing at times. I don't know. Hopefully they'll figure it out. That's not our jobs, but hopefully they figure it out sooner than later. All right. So, as you know, we're talking about new construction programs. If you join me over the past few weeks, you know I'm going through a number of new construction programs, and unpacking each one of these. Okay. Like I said, we have a number of them, okay, to help whatever scenario you may have. Last week, I went over the jumbo one-time close, and today we're going to talk about the jumbo two-time close. All right, a one-time close, remember that starts the construction phase, rolls right into the end loan, the fixed program, all in one program. Okay, a two-time close, you're going to have your construction phase. Once your construction phase is done, then you're going to actually refinance that into a fixed rate at that point in time. Okay, that's the difference between a one-time close and a two-time close. All right, so today we're talking about our jumbo two-time close. All right, so this is for single family jumbo construction. Allows borrower to finance the construction of a single family or multifamily home. This is primary home, second home, ground up construction. This is an interest only for 12 months while you're going through the construction phase. There's going to be a balloon payment at the end, right? That's where the refinance picks that up and rolls that into a fixed rate. The borrower does have the option to extend construction term for 6 months at a zero cost and at the same rate. So that's great, right? You never know what's going to happen. We know that sometimes supplies run short, right? Because of everyone else is building. So in times of those, no worries. We can extend it out there for 6 months, no additional cost to you, and we'll extend the rate and keep the same rate for you. Okay. Borrower must request the extension and be current on the construction loan to be eligible to extend it. Okay. Refinance at construction completion into amortizing jumbo end loan, right? Like I mentioned before, once the construction phase is done, then we're just going to refinance you into a jumbo end loan. Okay. DTI on these, you can go up to 45%, which is pretty good. You can go up to 48% if the client has at least $10,000 in residual income. All right. Residual income is total monthly income minus obligations. All right. So let's talk about credit scores and loan to values and loan limits. Okay. With a 700 credit score, you just need 10.1% down up to $1 million. 720, that's 15% down up to 2 million. 720, so get you just 20% down up to 3.5 million. Just a 720 credit score, just 25% down, you can go all the way up to 4.5 million. Okay. The end loan AUS must accurately reflect the anticipated construction loan payoff. So it's really the end loan that determines the construction loan, right? So loans over 2.5 million will still require my credit committee review. Escrows are not necessary unless flood is required. If you have flood insurance, you would still need to pay your flood insurance during this time. If you acquired the property less than 6 months ago, then they're going to go off the purchase price in 9 out of 10 scenarios. Okay. If you own the property longer than 6 months, then we're going to do an appraised value and see how much it's grown in value from the time you purchased it. Okay. You can go up to 30 acres, which is quite a bit of land. If you want to go up to more, that's just, once again, committee approval. Okay. So it's always a big question about the departure residence, right? If you own a house currently, what's going on with that payment? How does that get calculated in here? If the DTI with both properties meet program guidelines, then an abundance of caution lien is not required. The departing resident's PITI can be excluded in the end loan DTI qualification as follows, except, of course, Texas, right? Texas is its own community, apparently. The DTI does not exceed 65% when accounting for both the departure and subject's full PITIA, and the DTI with the departure residence included falls within the standard DTI table that we use. All right. Signed statement from the borrower affirming intent to sell current primary residence upon completion of the new home. The AOC lien on departing residents will be required. Okay. At the end of the loan, file is used for qualification on the construction. Okay. So once again, it's always the end loan that determines what's happening prior to it. All right, let's talk about reserves. Okay, when you're building a multi-million-dollar house, of course you got to have some reserves. So up to a $2 million purchase, new construction, you need 12 months of PITIA. Okay, if you're at 2 million, between 2 million and 3.5, then you need 24 months of reserves. If you're between 3.5 and 4.5, then you need 36 months of PITIA. If you're up over that 4.5 million, then you need 40 months of PITIA. Okay, loans over 3 million require the Federal Savings Bank account with at least a minimum of 50,000 in the account. All right, proof of funds on borrower paid items. All right, so you do have to provide proof of these things. It may be a canceled check, a cashier's check, maybe a bank statement proving the debt with a copy of the check. For liabilities, any installment loans, this is a good one to remember because a lot of people are carrying auto loans, right? If you get that auto loan below 10 payments, then we don't count that against your debt to income ratios. Okay, that can be a huge difference in buying power. Okay. And also remember, we have a consumer loan program that allows you to consolidate debt, your personal debt, while you're buying or refinancing. Okay. So there's a lot of different options that we have. Okay. So rental income from departure residents may not be used to offset PITIA. That's something that's new that came out. You need to have that property for at least a year, have it reporting on your taxes, showing a profit or a loss on that property. At that point in time, excuse me, you can exclude it. All right. So let's talk about what else we got here. The construction file. So we're always talking about builder's risk and current taxes, right? So nothing's been assessed yet because it's brand new construction. So they're going to enter the HOI, which is the homeowner's insurance premium, as an estimate. Keep in mind the title company, the local tax assessor, right? They have calculators that we can use to estimate what the tax calculation is going to be. There's always a multiplier, right? They give a value and then they give us a multiplier. We multiply that out, and then that tells us how much we need to hold for taxes for your first year until once that property gets assessed with the other properties that are similar to it in the neighborhood. Okay. In this scenario, the borrower may not act as their own general contractor. Okay. Not in this instance. All right. If you have any questions regarding our new construction programs, please contact me by phone or email. I'm always accessible. My cell phone is always on, and I would love to hear, what people are doing with their projects. That's one of the funnest part of being in this position is to seeing what everybody's out there doing. Okay. So remember to join us next Friday when Gary and I discuss our dual employee banker role and how we're hiring real estate brokers and real estate agents as a part-time W-2 employee here at the Federal Savings Bank. You can earn commission from the real estate side and the mortgage side with this program. Boss ladies, let's go. Who wants to be making more money off each one of their closings? I think that's amazing. That's a huge opportunity, and I just can't wait to discuss it. For some of you, I mean, that could be an extra $20K a year. That's not bad. Doing the same thing that you're doing now, right? A few touch points on a app from your cell phone. That's pretty simple stuff. Some of you are top producers. You're already killing it. Maybe some of you brokers are out there killing it, right? You're already making, millions. Why not add another 2.5 million from the mortgage side, right? So this is all depending on your individual production or your team's production. But at the end of the day, let's see what we can get you, right? I mean, that's money left on the table. We're always told never leave money on the table. So if you're interested in this opportunity prior to July 24th, Facebook Live, call me. I'd love to talk to you about it. We've been hiring people, agents, brokers last week, this week. So I would love to have the conversation with you. Just give me a call. All right, this weekend. So this weekend I will have my phone on and my laptop on all weekend. For all you weekend warriors out there, you may need some help getting someone pre-approved or making an offer. Whatever the case is, we're here to help, and we're here to satisfy whatever needs that you may have. All right, so as a family, we're just hanging out at the house this weekend. I think we're going to get our boat out, get it cleaned up. Yeah, it needs some work done on it. I got a lower unit that needs to be replaced. So it's broken down at the moment. But the plan is to get it up and running so we can do some boating this summer. Love boating, love water, love all the outdoor sports. All right. That's all I've got for today. I hope everyone has an awesome Friday and weekend. Thank you so much. I appreciate you. And like always, let's get them under contract. Take care, guys. Bye-bye.